So I think we gave our turn report to you, the hard copy.
Okay.
Do you have that at all? I can just confirm some numbers.
I do. Hang on.
I already saw one error that we've already.
Yeah, there were some errors on it. I didn't have time to reconcile them all. I just entered the data and let it be. Okay. I just want to make sure I get that set up. Okay, so let's see. Team, what number? Team 10. Yeah, see, I think I noted it where it didn't match what the spreadsheet told me.
Yeah.
So,
trying to figure what's going on here. You mind if I try to figure it out?
No, go ahead. There was a blog post, there was a forum post about that today. It's all due by the presentation. So next week. So you have to, so the individual reports go to the board, and the board report is what so you submit one package with all of it. And the board report is on top, and underneath that is the individual reports plus everything in your envelopes. That's what you submit. And so then that's what you're presenting on. So.
Already busy this week. Yeah, it's like I think I just lost the camera.
All right.
What's that?
I said that's such a dad. Just Google it yourself.
Yeah. Yeah. Well, I'm a middle-aged dad. That's what I am. So may as well just embrace it. I don't know where else to put this thing. Does that work? Is that better? No, that's maybe that's a little bit better.
$4.604 after the contact, so 4604. He said you would know that. So 4604. Anything that we want. So that should match mine. And we wouldn't receive anything.
So I was watching the video, and this one is to capture Jonathan dropping his water bottle.
I'm surprised you didn't get me all the time. Like I dropped it every day.
Yeah. So I was playing with
But then he dropped it.
Yeah.
That's funny.
I never dropped mine, I don't think, but I think
It was like
everyone dropped it. It seemed like everyone dropped it at least
in my
once.
day backpack, the sack that holds it wasn't tall enough because they're so
Yeah,
long.
they're too big. Yeah, I know.
When they're full, they get heavy, so clearly, like, I still gotta put my backpack on just enough. So it wasn't that my fingers were slipping, it was too big.
Yeah, well, and I haven't been using it since we got back because it doesn't fit in the cup holder of my car, and so I don't have any place to put it.
Yeah.
You know.
I like mine. I gave mine to my mom because she works in manufacturing, and so she says like all her water bottles get all warm and stuff. So I gave it to her and it holds stuff. So it's being used, it's just not being used by me.
So the only thing
Paxton has a no-hitter 3-6. See that?
I didn't in the time station last week, I didn't see where it talked about like liquor and cannabis tax. That's state.
That is
Or was it under something?
no, it's not specific. It is right here.
Oh. I was, okay.
Yeah.
Got it. I guess that would make sense. Because I feel like other is such a broad thing that you're not.
The cannabis was actually really small. It gets a lot of publicity, but it's not very much.
Well, like the liquor tax is huge.
Mm-hmm.
Like I was working at Safeway when they passed it, or when they when they sold liquor in the stores, and it was like people would buy like like a half gallon or something, and it's like triple in price.
Yeah. Well, that's how they sold the initiative.
Yeah.
And they said, look, we're going to dismantle this whole state-controlled liquor system. In exchange for that, there'll be this big tax, and that'll compensate.
And there's two taxes. So like it's hard to calculate it yourself. So you have like a tax generator that is for you because
There's a liter tax.
there's the state tax on 9% of how much it costs, or 10%, whatever it is now, and then there's 20% per weight.
Liter.
Liter, yeah.
There's a liter tax in Washington.
Yeah. It's ridiculous.
it's cost more than that's it.
It's like a drink that's like $40.
One 1.5.
A lot of my friends, they just drive to tax to go buy alcohol.
Right. Or if you have access to the store on base.
Yeah, a lot of them, I have a lot of friends.
Yeah. So here,
Yeah, so
20.5% on shelf price in addition to a flat spirit liter tax of 3.7 bucks per liter.
right.
You're good on the CBO report. Someone is correct. It's wrong.
What? Yeah. Thought I lost brain cells after watching it. I was trying to memorize those songs. And it was just like, you don't have.
So I thought of an interesting hypothetical for you.
Okay.
So a few weeks ago, we were talking about monopolies.
Uh-huh.
Of course, the NFL was brought up.
Right.
Exemption. So let's say, for instance, that the NFL stopped doing their TV contracts with the big three, and they either like went solely with one, or they just went solely on NFL Network, or like if they went with like say CBS,
Right.
Would the TV monopoly be broken up before the league was, or?
No, I don't think so because it's not necessarily a monopoly that's exclusive on football, right? I mean, again, it all depends on how the regulators would define the market. Now, if they define the market as the market for professional football, then yeah, maybe the broadcast networks would be in trouble if one broadcast network acquired all of the rights to all of the NFL games. But the NFL itself is exempt, so it doesn't have to worry about any antitrust concerns. So
even if they just opted for going with just the NFL Network,
right? See, but well, every time they do stuff like that, what they have to worry about is that occasionally, when they upset congressional members of Congress, they start threatening to pull the exemption. So they have to be, even though they're exempt, they have to be careful that they don't draw the ire of the government, right? But I think, if they were to put everything on the NFL Network, all the games on the NFL Network, if that's what they chose to do, there'd be nothing wrong with that. I mean, DirecTV has the exclusive on Sunday Ticket. So, there's that they're the only provider where you can buy access to all the games, and that's not an antitrust violation. In part because you can consume the NFL in other ways.
I think doesn't Sunday Ticket kind of operate the same way like MLB TV does, where certain games are blacked out.
You're blacked out in your local market. Yeah. So the blackout rules themselves are. By definition, always by definition, right? Right. You can't watch it on TV. We're not going to let you watch it on TV unless the game sells out, right? That would generally not be, that would not be considered a competitive situation, right? But they're allowed to do it because they're exempted monopoly.
See, like me as a Yankees fan, the only games that are blacked out for me are on ESPN,
right?
Nationally
Which you can then
televised.
watch them on the national broadcast. Yeah. I used to have Sunday Ticket. I loved it. But I hate DirecTV, so I gave them up.
I haven't really gotten into the NFL in years. I know a lot of people are like, oh, it's because of the camera. It's because the refs suck.
Well, the game's becoming really I don't know. I kind of feel like they overplayed their hand a little bit. I look at the game schedule a lot of Sundays. Because I'm a huge NFL fan. I love the NFL. But honestly, I was interested after the first 2 weeks. Unless the Bears are doing good, there's really nothing interesting going on. If your team is doing well, there's nothing interesting. But used to not be. The Bears have been good a long time. But I'm still super interested in the dynamics of the league. But I feel like I am becoming as I'm getting older, I'm much more interested in baseball and far less interested in the NFL. And so I've completely lost interest in the NBA. I have no interest in it at all. I don't even feel like it's real basketball anymore. I love the NCAA, but I hate the NBA. And I like hockey, but I find it really hard to watch on TV. Yeah, and I feel like the same way with soccer. We went to the Sounders game on Sunday. It's so much more interesting to watch when you can see the whole game, But see, football and baseball, you can watch them. I think football in particular is a TV sport. Yeah, it's actually, because I go to a couple games a year, and I actually think I prefer watching it on TV than live. It's actually kind of boring live.
I honestly prefer watching rugby over football. In part because I play it until it never caught up to me. Because it's football, but better. Yeah. But it's you're right. It's not made for TV because there's no built-in commercial breaks. There's no built-in stops.
Yeah. Well, and for me, the real thing, like with soccer and with hockey, is that the game. What makes the game interesting is the whole field strategy. Like in the NFL, you're not really you're not, when a team is at the, you're not concerned with most of the field for the most, right? Especially as a team marches forward, what's going on behind it, it's not interesting. But in soccer, you need to be watching all four corners to see, and same thing in hockey. You know, the play. What's interesting about it is not really the games, but when the puck's going. Yeah. And you can't see that on TV. You know, whereas like you can when you're live. Like, and when I go to hockey games, I used to go to a lot of hockey games. Yeah. When I worked in downtown Los Angeles, because I worked right near Staples Center. Okay. And Staples Center is like a super corporate thing. Like I've been there like 50 times. I've never once paid to get in there. And it was always corporate tickets, you know. And I've sat on the ice, and it's fun, you know, to see that. But it's really impossible to understand what's happening in the game. Hockey's good from like midway up, from the varsity, or about midway up the lower bowl. Is the ideal spot, you know, but where the view of the glass doesn't block any of the ice. But and I feel like the same with soccer. I would not want to sit way up front or in the ends. We were in club seats just below the luxury boxes. You know, so we had a great, just looking at this field was like right here, and you could see everything that was happening. It was fantastic. But so anyway, long story short, I feel like, you know, the NFL, they have this thing because I really think that it's the ultimate TV sport. You know, but I would much rather watch the playoffs than any regular season. I'd rather watch the I love the regular season. It's one of I think it's one of the most exciting. Oh yeah, and I watch every pitch of the World Series, no matter what teams are in. I still find it super exciting. No, I don't do that, but I do have someone report the score during the game if there's a game on during class. Yeah. Now, if the Mariners make it in, then we might talk. Well, you see, Paxton has a no-hitter through 6. Yeah. ESPN sends no watches, so I've got Paxton is 5 Ks on 71 pitches through 6. That's a lot of pitches, but it's not as many strikeouts. But he's got no hits. So, yeah.
So okay. There wasn't this stuff added up like this fees and like
okay.
Other fees.
Okay.
So this is correct.
Okay. But this number was the one.
Yeah. So that and then this one for my first turn, which I guess maybe affects me for like my scoring. So this was the number I gave, and so that was because she included all those other we included all those other fees.
Right.
And this number, and so this is a lower number now.
So which number is supposed to go here?
So it's 31,745,000.
And then this number is
everything else is still correct.
Okay.
It's just, and so that's the actual cost of the transfer unit.
Okay.
So I don't know if you want those.
Yep, I'll take them. And I'm going to have to do like a massive reconciliation after everything's turned in. Yeah. So.
Don't want to get audited.
Yeah. All right. Yeah, I don't think I don't think that there's I expected that to some degree, and so for next year I'm building an online system that's going to do all of this electronically, so that you don't have to do all the math and the paperwork and stuff. So make things a lot easier. Yeah, well, you have to do it manually first before you can make it programmatic. All right, there's no hit through 7 now. Okay, let's get started. We're a couple minutes late, so I want to get going here. And I don't know if she's on, but this is Lorraine right here, this electronic Lorraine. So I don't know if she's on. Let me see if she's on.
She's also going to be getting on my Skype.
Yeah. Okay. Okay. So here's what's going to happen. And we got a no-hitter watch, by the way. So I'm going to be paying. I'll turn off my ringer, but James Paxton has got no hits through 7 on 5 strikeouts on 83 pitches after 7. So his pitch count's getting up there, but he's got a no-hitter through 7. So that's interesting. Yeah, that's true. It's 5-0. It's 5-0 though, by the way. Yeah. All right. Okay, so let's see. We're going to cover taxation and a little bit on international law in the first segment. Then we will cover tort reform in the second segment, and then we will we'll go to the game tonight. And so it's going to be, I'm not exactly sure how it's going to work. It's be a little crazy, but I think what I'm going to do is we'll do all of the lawsuits first, and we'll just do them at once, and it'll make it a kind of a spectator sport. Everyone can watch and see what happens. And then after that's done, we'll do all the auctions, and we'll just kind of burn through them. And then that'll leave time to do all the last accounting and bankruptcies, if there's any of those, and repo markets, if there's that. And it's going to be a little wild. So should be fun. And then the report, everything else, the whole report package and everything, there was a forum question about this and another question earlier, is all due at the presentation next week. So when you give your presentation is a presentation of your board report. Your board report is the summary of the individual reports. And so what I'm expecting that you'll give me when you come to present next week is a kind of maybe even one of these with all of your envelopes, the individual reports with the board report on top, and then you're presenting your board report. So now one of the things that I'm going to have to probably do though with the awards is because I'm going to need a chance, I think, to audit everything to make sure everything's correct. But I'm going to look to see how the scoring turns up, and we'll have at least preliminary scoring available next week, and then subject to audit and review, of course. So that's the plan there. And then let's see. So that's next week, and then the last test opens after class next week and stays open for a week, and then I think that's it as far as us graded assignments in the class. All right. Any questions on any of that? Everybody good? Yes.
Do you want us to dress up or anything for the presentation, or is it just casual?
No, I wouldn't. No, you don't have to dress up for the presentation. It's fine. But it is a shareholder meeting. So you're presenting to the rest of the class is pretending to be your shareholders. So you have to explain your results to your shareholders. So, but I don't think I don't want to make you have to dress up. I don't see the need to do that. Anything else? Yes.
You want physical copies of our presentations as well?
Yeah. Yeah. Why don't you do that? That's probably a good idea, because I want the report has to be a physical copy because it has to have all that stuff. So there's no turn in on Sakai. This is your hard old style, hard copy report. So yeah, it probably would be good to just print a copy of the slides and attach it to the front so that I have it all in one packet. That's a good question. Anything else? All right. Good. Then let's move on. All right. This is all the stuff. I'll do that later. Okay. Did I send the sign-in sheet around? Okay, good. All right. Got that taken care of. Just kind of trying to keep track of everything here. All right. So let's talk about tax. This is probably a topic I should move up in the schedule to earlier, just because tax does drive so much of business structure. Yeah, question? Oh no, okay. So tax is a super important topic because, number one, it drives the structure of a lot of transactions, of a lot of even formations. Business formations businesses are often formed around the tax strategy. Lots of times I'll have clients come and ask me, well, what form of entity should I form? And I'll often send them off to their CPA first, and then have them, get the advice from your CPA about how's this going to affect your taxes, and then come back to me and then let me know what form you want to create. So there's an enormous tax consequence to the form of entity, and then there's enormous consequences to screwing it up if you make a mistake on your on paying the tax, paying the wrong tax, it could kill your business. It can totally knock over a business, and does it all the time. So it is extremely important to understand what taxes your business owes and when they're owed, and to pay them when they're due. Otherwise, you'll have all kinds of troubles on your hands. So what we're going to do is we'll talk first about the federal system and then the state system, at least the Washington system. Don't forget also that if you're doing business in multiple jurisdictions, you're responsible for taxes in multiple jurisdictions as well. In fact, speaking of baseball players, even though it's a personal income tax matter, baseball players, football players, they pay income tax in all the states where they play. So a baseball player's tax return is a nightmare because they actually do have to pay income tax everywhere. So it's a crazy system. So starting off, the federal tax system. So the personal income tax is the primary way that the federal government finances itself. So what is our personal income tax system? How does that work? What do you pay taxes on? What's that? Everything? Yeah. No, actually not quite everything. It is an income tax. So it's a tax on income, but not every dollar of income is taxed, right? What is excluded from the income tax? What kind of things can you exclude from your gross income that you actually pay tax on? Yeah. Okay, benefits is one, right? Certain, and not only veterans benefits, but other kinds of benefits, with child support, health insurance. So remember that your health insurance that you get as an employee is effectively a form of your compensation that you don't have to pay income tax on. Yeah. Yeah. So what can you deduct? What? There aren't really many great deductions anymore. There's one really big one left. But what's the primary deduction that you get on? So, okay, so a standard deduction. Does anybody know what that is? Everybody know the difference between a standard deduction and an itemized deduction? Yes. Okay, what is it? How would you describe it? Yes.
Your standard deduction is a set amount by the government. Then your itemized deduction, essentially they list a whole bunch of different things like medical expenses, real estate taxes, things like that. And you have the option of adding all those together to see if it's higher than your deduction.
Right.
You take whatever's higher.
So you can just take the standard, which most people do, or you can itemize if you have enough deductions to itemize if that's more. But what's the one really, really big itemized deduction? No, children's one. Mortgage interest. That's the biggest one. So and it comes up all the time in policy debates as a possible way that the government could raise money, is by capping it, by getting rid of it completely. Some people want to do that. But effectively, one of the ways that the government imposes policy or makes policy is through the tax code, which is one of the reasons why our tax code is such a mess. It's long, it's complicated, it's difficult to understand, it's very easy to make mistakes. And that's because there are so many of these really policy provisions that you see in the tax code. But ultimately, that's how the primary way that the federal government finances itself is through personal income tax. Now, what about corporate income tax? So who pays that? So small businesses, yeah, right. So it's a corporate income tax. So it's a tax on corporate net profits, right? It's not a tax on sales. It's a tax on net profits. And the rate, they just lowered it dramatically. It was used to be the highest in the world and in the United States. And now after the break, there's a chart in here. It used to be that the highest rate was almost 40%, 38.9%. And now after the tax bill, we're down in the 25 range. The highest rate is just above 25%. So we dramatically reduced corporate income tax. Well, why would we do that? What was the argument that was made last December for why we should reduce our income taxes. Because do we have a whole lot of extra money to throw around in the United States? No, absolutely not. We spend far more than we bring in revenue, dramatically more. Like that's what our deficit is, and our cumulative debt is in the trillions of dollars. And so we just reduced taxes for corporations. Now, why? And I'm not taking a position on this. I'm just asking the question: why would you do that? Yeah.
Well, the thought was that would encourage more of their business here. It would also help us, like our large corporations, international level.
Right. Yeah. It's a competitive. That's the argument. Right. The argument is you lower the taxes, it increases activity, and the increase, the lower rate times the increased activity is going to be more than the higher rate with the lower activity. That's the argument. And we're, well, obviously it's too soon to tell whether it worked, but that's the argument. Okay, so let's see, corporate income tax. All right, so we're currently at a 25% rate, which puts us now, let's see, we're right in with Canada, in between Canada and Spain. Yeah, okay. All right, so these are both taxes on income, on money that net income that either you make individually, the amount of money you earn as an individual, or the net income that a corporation earns, revenue minus expenses. Now, what are employment taxes? These are a little bit different category of tax. So what exactly are they? Yeah? Yep.
Social security taxes and other deductions usually coming out different federal government.
Right. So it's a tax on payroll, and it goes to fund specific types of things, right? And it's a fixed amount. And so I put a link here. So the current rate for Social Security is 6.2% for the employer, 6.2% for the employee. So the employer and the employee each pay half, and for a total of 12.4%. And Medicare is 1.45 for each side, and that's another 2.9% in total. So that's what is that? 15.6% or whatever that is, 7%. So that is just on top. So every employee that you have as an employer, you have to pay at a minimum 12.4% or 6.2% for the Social Security and 1.4% for 4.5 for Medicare. No matter what you do, when you pay an employee, that's right off the bat, that expense is added immediately. Okay, so that's just a cost, bless you. That's just a cost among the costs of having employees. Okay, so what other kinds of taxes does the federal government collect? I mean, we were talking about it earlier. Right, liquor taxes, not cannabis, because of course
But like tobacco.
Yeah, tobacco, liquor, yeah, sin taxes, yeah, gasoline. There's a federal gasoline tax. There's tariffs that we charge on goods that come in. There's all kinds of other taxes that the government collects. Yeah.
I never really looked into this. Why did they start taxing water?
What do they what?
Why did they start taxing water?
Water? Yeah, I don't know.
Water? The CD, it's like a CBR tax. Like,
Oh.
It's not the federal government. Like each state has a different tax. Like California has like 7 cents per bottle.
Oh, for the bottled water?
Yeah.
Oh, okay. I think that has more to do with the whole recycling, thing. Now, I know in California, when I was a kid, the way we used to make money in the summer to go see movies or whatever was we would go collect bottles. Every bottle had, it still says it on there, I think, California redemption value. You get like a nickel per bottle or whatever. And we'd go around, collect all the bottles, and that's how we would make money in the summertime. So that system was really designed for the purpose of encouraging recycling. But I'm not sure. I think that tax has more to do with just the cost of dealing with all of that plastic than anything else. 10 cents in California? Yeah. Yeah, so you can make decent money turning in those bottles. So here's a chart. I wanted to show you this. Not a picture of Paul Ryan necessarily, but where's the chart I wanted to show you? Oh, here. Okay, so where does our, how do we fund the government? Make this bigger. Okay, so you'll notice here that individual income tax makes up the vast majority of the government's receipts. So almost more than half. The corporate income tax is a much smaller piece of it. It's a declining percentage, as you can see. It used to be much more in the old days. And then you'll notice Social Security and Medicare are a big chunk as well. But these, of course, don't fund the federal government's general expenditures. They can't use this, for example, to fund defense or anything like that. That all has to come out of here and here. And then you have all these other taxes are a really small amount of our budget. So, but in the United States, we rely heavily on the individual income tax for, the vast majority, well, not the vast majority, but more than 50% of our tax receipts. What's that?
So yeah, we do. It sucks.
Yeah, right. So there's some question as to whether that's fair or whether this is a good idea. This comes up all the time, but it's really hard, as we saw in December, to actually make tax policy. It's very difficult because so much of the political system is built into it, and it has such an outsized impact on things. So, but what you'll notice here is between this and this, which is basically all comes off of wages, right? So this is half paid by employees, half paid by employers, and this is all paid by individuals. So if you take this plus half of this, a strong majority of the income that the government receives comes directly from us as taxpayers, individual taxpayers. Okay, any questions on that? Yeah.
I know there's been a lot of talk recently about paying into Social Security and how much is going to be available. Like when the people who are currently paying into the main contributors, at least like 20s, 30s, get to reach the age that they would receive it. So has there been any legislation?
Yeah, zero. Yeah, but because there's no money there. Right. So there's no money in this alleged trust fund. Did I talk about that already in this class? So all of this money that's coming in is going to one of two places. It's going to pay for current benefits, or it's being lent to the federal government to spend which spends it in excess of what it's collecting. So what most of this money is going into federal bonds, federal government bonds. So there is no money there. So when we have more beneficiaries than payers, then it's going to have to come from the rest of this budget. And so, we're either going to have to raise taxes or decrease the amount of benefits that we provide or devalue the currency or something. But yeah, I think for younger people now, there's very little chance, I think, that the Social Security system that we have in place now will be there for them by the time they retire. It's almost impossible to believe that would happen. Yeah.
Like back in 2011, it was like the Simpsons Bulls. That was like the last big time that politically somebody tried to do something about it.
Yeah, that was in the early 80s, right?
No, there was one that maybe Simpson Bulls was in the 80s, but another one that came out in like 2010.
Oh, okay.
So it had recommendations for if you were going to fix this Congress, this is how you should do it. It was like 80% or maybe like 70% benefit reduction, 30% cost increase.
Right.
Nothing, to your point, nothing happened. Nobody did anything.
Yeah.
Politically, like nobody. Essentially, if you're 65 or over, you probably more likely vote.
Right.
If you're like in your 20s and 30s,
right.
You probably don't vote.
Yeah.
So the answer to solve that is like all of us care.
Well, it's always been referred to as the third rail of politics, in reference to like a subway train. If you grab that third rail, you're dead. And so that's kind of what it's always been referred to that way. And so it's been very difficult to, anytime you talk about decreasing benefits, the current beneficiaries freak out and they're a big voting bloc. And that's just been the way and they're getting bigger as a voting bloc. So it's getting even harder to and reform this system. So at some point it'll break and then they'll be forced to reform it, right? That's going to happen at some point, one way or the other. Yeah.
I just want to keep going on my soapbox.
Sure.
For 1 second. So you'll hear people say fair tax.
Yeah.
And those are people, think about it, they're in their 50s and 60s.
Right.
They own their house.
Right.
They have raised kids.
Right.
They've taken the mortgage interest deduction their whole life.
Right.
They've taken the child tax credit their whole life.
Right.
And they want to turn around and change it for everybody in this room.
Right.
So when you hear things like fair tax, I just want to make sure you realize, especially depending on how old they are, it's yet another scheme. I don't want to say scheme, but it's like a wealth transfer, just like Social Security, just like everything else, going from the current generation to pay for not the future generation,
right.
but the past.
Well, and one of the problems we have is that everyone votes for self-interest, right? So if everyone just votes for self-interest, it's very difficult to make longer term. Somebody's going to have to sacrifice something in order to solve this problem, and nobody wants to sacrifice. Yeah. And so here, this is a chart which I think is interesting because it shows the top federal income tax breaks. So these are where the most of when you talk about tax loopholes, you hear in the policy debate, they always talk about tax loopholes. This is the list they have to work from. And so you'll notice the very top one is employer paid health care, health insurance and long-term care, over $150 billion in federal revenue. And this is one of the other things about this debate. They will say that this is costing the federal government $160 billion. That's what they always put it in those terms. It's costing the federal government. Well, it's costing it because it's just taxes that we don't pay. If they were to reduce that, it just would be more tax we would have to pay, right? So the very first one, the biggest one, is the health insurance benefit. That's where most of the tax break comes from. Dividends and capital gains. So the fact that if you make money, if you buy a share of stock and it goes up in price, you pay a much, much lower rate on that appreciation than you pay on your salary. It's capital gains gets taxed at a far lower rate. And so if we were to equate them, we could pick up another $125 billion. Deferral of active income of controlled foreign corporations. How about that one? Deferral of active income of controlled foreign corporations. That's $120 roughly billion. This is just something where this is all that money that that is in these foreign tax shelter companies. Yeah. He did it? A full no-hitter? Sweet. Yeah, 5-0. Good for him. Against the Blue Jays, and he's Canadian. So yeah, take that, Maples. Okay, all right. So so this is when you hear about Apple has $1 billion in an Irish intellectual property company. That's what's happening is there's a ton of income that U.S. taxpayers keep in foreign accounts, and then they don't have to pay tax on it. So so that's what that is. Defined contribution retirement plans. So these are your 401ks. When you put money in your 401k and you defer the income until later, and then ideally pay the tax when you're in a lower tax bracket. That's there's what we call tax leakage there as well. So the thing is, without going through all of these, if you add all these up, this is we're talking about close to probably, if you add all that up, closing in on maybe $750 billion, and that's all coming just from tax code provisions that reduce the tax rate. Okay, so you can get mired in this whole thing if you want to. I don't suggest it, but there's some interesting charts in here. And if you really want to see, I don't have the chart in here, but if you want to look it up someday, we don't have time. But where the federal government spends its money, the vast majority of the money we spend is on entitlement programs by far. So when we have these budget battles over, well, we're going to spend this much on defense or this much on this or that, we're really talking about marginal numbers on the edges. The real money that we spend, it's almost all, the majority of our budget goes to pay for entitlement programs. Okay. Yeah. Yes.
There's like a really interesting app that one of the guys from Microsoft made. You just Google like Microsoft. You don't need to do it right now.
No, I was just looking at some. Yeah.
Microsoft projects, whatever government spending. It's like an app
Yeah.
on your phone.
Yeah.
Really
Steve
cool.
Ballmer did that. Yeah. Yeah.
Shows exactly where the money comes in, where it goes out. It's very easy to manipulate.
Yeah. There's a. It's like if you look here. So this blue, it's hard to see. This blue box is healthcare, Social Security, defense, and then if you look, everything else is in here. So like when you look at education is here, food and agriculture, transportation, veterans. So this stuff right here, they can't move, they can't change. It's all entitlement spending, and you know it's almost a whole Pac-Man of just stuff that we can't change. So we're in a mess. I mean, it's a mess, and it's gonna, like I said, it's gonna break at some point, and then some sap of a politician that's stuck there when the music stops is gonna have a tough time. Okay, but, and we've talked about this before, the federal government has, among other advantages, it has two really strong key advantages, which are what? Does anybody remember? I'm sure I've talked about this before. What are the two big advantages that the federal government has that allows it to get away with this crap? We can print more money. We can print as much of it as we want, apparently, and the world market doesn't seem to devalue. We can continue to print it, and it doesn't seem to have any effect on its value. In fact, it tends to go up. And why is that? Which is the second reason. Reserve currency, right? As long as we're the reserve currency, there's this going to always be demand for dollars, which means we can print as many of them as we want, and what doesn't seem to devalue the currency. That won't last forever, right? But that's what's making this system currently operate the way it does. Okay, all right. So on that happy note, let's talk about the Washington state tax system. So Washington and all the other states have the reverse problem, you know, to the federal government's benefit. They cannot print any more currency, and they don't have a currency, so they can't be a reserve currency, which means that in order to pay their bills, they have to actually collect as much money as they spend. Otherwise, they can't continue to operate. And most states have balanced budget provisions in their constitutions, which require them to collect at least what they spend. So as a result of that, states have to have their tax systems look different. And in Washington, we have a really almost bizarre tax system. It's very unique in the United States. It's one of only a handful of states that have a tax system the way we have it. So the first is the retail sales tax. Okay, so that is a tax on retail sales. So what does that mean? What do we mean when we're taxing retail sales? Okay, items you purchase. And so what kind of items would that be? Non-food, okay? So we don't charge it on food, even though you say it's okay, it's on retail, items sold at retail, except if it's food. What else?
I thought it was like hot foods, it is taxed.
Right, and then they changed the rule a few years ago to tax the sodas and the candies and that sort of thing, you know, as a way of again, implementing policy, all right? But our sales tax system is a complete mess, as you might imagine. So there are some things, for example, some services that are considered retail sales. So the classic example I always mention, because I had a client that had this problem, she was a landscape architect, and then her client said, well, can you deal with the maintenance also? And so landscape maintenance is a retail sale, subject to the sales tax. But landscape architect design is not. So she had, performed the service, never had any idea that she was selling something that was a retail sale, got audited, and they came along and charged her 10% of her sales for 4 years, which was more money than she had in the bank. Yeah.
So why don't you just make your business, I guess, redesign the architect of someone's yard every
yeah.
how many stuff, and just like
Yeah. Yeah, well, you probably wouldn't survive an audit with that strategy. You're welcome to try it, but even the and I mean this with all due respect and great love, even the morons at the DOR would figure that out. Yes.
Gym memberships here
Yeah.
are also taxed.
Right.
But like in California, they're not.
Right.
Something that, why would that be? I mean, is that you're not purchasing something, I guess. I mean, it's just a membership fee.
Yep. It's just because some state congressman or state legislator decided at some point to change the rules to tax that for some reason or another. So this is the problem. It's so convoluted. And in addition to this, the sales tax is different in every city. And so sometimes you can have sales occurring right across the street from each other, and the sales tax is a different amount. And so it's very complicated to figure out what exactly the sales tax is and what exactly it applies to. Same thing is with, I had a client that got into this problem also, software. So if you sell software, so if you're a reseller of computer programs, for example, that's a retail sale. But if you sell a computer or if you sell services to install it, that's not. But if you don't separate the two on the invoice, then the total amount is subject to the retail sale. Retail sales tax. It's extremely complicated. So the point that I want to make here for all of you who are considering starting businesses at some point, figure this out before you get started. Figure it out and go and in my landscape architect example, she had a CPA who moved here from another state and wasn't familiar with the retail sales tax and gave her bad advice. You know how much credit that buys you with the DOR and the audit? Yeah, 0. Still have to pay the tax. You can go sue him for his bad advice, but the DOR still wants their money. And by the way, they don't just come after you for the tax. They come after you for the tax, the penalties, and the interest, which generally double the amount that you owe, and they can look back 4 years. So if you screw this up, it's 10% times your sales times 2, and that's what you're going to owe the DOR. And you know how open they are to negotiation on this amount? Yeah, not at all. Not at all. Right? They don't, because they can't print money. They need the dollars. Yeah.
It's irrelevant now.
Oh, sorry. Did I steal your thunder?
No, it's just.
All right. Sorry about that. Yeah, it took me too long to get to you. Was there another hand? Did I see another hand? Was there another hand? No? Okay. All right. So, lesson learned. It is very, very hard to figure this out. Don't screw it up. Figure it out before you start your business. The other thing too, by the way, reseller permits. I want to mention this as well. This is just good, solid, practical advice I'm giving here. Reseller permits. So if you buy items at retail and turn around and resell them, is this what you were going to talk about? Yeah. Do you have to pay tax on that?
So I used to work at a plant nursery a few years ago.
Okay.
Like we were like the retail,
Mhm.
but if like
A grower?
business, no, like someone who was going to replant it,
Right.
like a landscape artist, if they bought from us,
Right.
we didn't charge them tax because they're going to charge tax.
Right. So this is the thing. The sales tax is due on the consumer of the good. So if you are a reseller, if you are going to buy something and then sell it to somebody else, the sales tax is not charged at each step in the process. It's only charged by the final consumer of the good. And so in this case, if you are a nursery and you're selling to a landscaper, that landscaper is going to ultimately charge for the sale of the plants. You don't have to charge tax to them. But, and this is a big qualifier, you have to have records for every transaction that you do like that. You have to have the reseller permit from the person who's buying from you, and you have to keep that record for every single transaction. If you cannot prove that you have a valid reseller permit, the DOR will charge you tax on that. and they are incredibly strict on this point. So if you are a seller of a good that normally a tax is charged and you don't charge tax, you better have the records to prove it, because what the law says is, and I should bring this up to just show it to you because it's kind of like shocking. It says that the state of Washington has the right to assume that it's a retail sale unless you can prove that it's not. And you have to be able to provide the records. The burden is on the taxpayer, it's on the business to prove that it's not a retail sale. Otherwise they can ring you up for it, and they don't have to prove their case. You have to prove your innocence in that case. Yeah.
What about like apps like eBay and like other third-party selling sites?
Yeah.
So if you sell something on there,
Yeah.
isn't it assumed that it was already bought from a retail store, so the tax is paid there? Like if you buy a shirt or something, or someone else does, and you pay tax at the time that you purchase it from the retail store, and then you go and sell it on eBay.
Yeah.
And say you collect your profit or whatever.
Yeah.
And anything, sell it for at cost.
Yeah.
They don't, because normally those sites, I don't think a lot of them charge tax.
Right.
So how does that work?
Well, the sale of a used good is a retail sale.
It is.
Yep.
So for the websites that like don't charge tax, then is that how does that?
It's dangerous. Yeah, it's dangerous. And this is, in fact, there's a Supreme Court case right now that's pending in front of the Supreme Court right now that could change this whole game, because what the rule now is that if the seller does not have nexus, or a nexus is a physical presence with the jurisdiction to which they're selling, they don't have to collect the sales tax there. But the Supreme Court's considering changing that rule, in which case all internet sales will be subject to sales taxes, pretty much. But it's the responsibility of the seller to collect the tax. It's not the responsibility of the buyer, even though the tax is actually taxed on the buyer. It's the tax on consumption. The tax is actually owed by the person who buys the good, but the seller is the deputized tax collector for the state. And so it's the seller's obligation to ensure that the proper tax is collected. Yeah.
How does that use tax?
Yeah, good question. So the use tax is how they account for the failure to collect retail sales tax. Because if you go to Oregon and you buy a MacBook at the Apple store in Portland, and to avoid the 10% tax, according to the law in Washington, you're supposed to declare that and pay the use tax. Use tax is a tag-on tax that replaces uncollected sales tax. So if you were supposed to have paid sales tax but didn't, you owe the use tax. So in theory, now how many of you actually do this? Does anybody do it? You do? You declared it? No, did you declare the tax and pay it? Okay. All right, I'm gonna text the DOR right now. I gotta, yeah, so did you bought the laptop in Oregon?
It wasn't a laptop, it was just a handful of things I paid sales tax on.
Right.
Declared.
And do you ever declare those?
No.
Yeah, right. And so, well, cars are different because there it's a registered item, and so they know they can. There's a system, a governmental system, to check to make sure sales tax has been paid. And so when you go to register a car in Washington, well, I think they have an agreement with Oregon now where the Oregon car dealers actually collect the tax. But even if not, even if you were to buy a car in another state somewhere where there's no sales tax, or buy it and have it in a foreign country or have it delivered, when you register it, you have to prove that you've paid sales tax. And if not, they collect it. They collect the use tax before they'll let you register it. Or at least that's what they're supposed to do. Yeah.
So how I was taught use tax was that at the shipyard I worked at was that so we would charge use tax on anything that wasn't attached to the boat. So the example again was all the work done on the boats. If you turn the boat upside down, everything that falls off, you charge use tax.
Okay, because those are personal items, tangible items, which are generally subject to sales tax. But the shipyard is a federal. You're talking about the naval shipyard?
No, shipyard.
Oh, okay. Because so I'm not sure exactly. I'm not sure exactly where that comes from. I'd have to understand the transaction some more. But just as a side note, if you sell to the federal government, the state says that anyone selling to the federal, because you can't charge sales tax to the federal government. The federal government's exempt from the state sales tax. So the way that Washington works around this is they just said, anything you sell to the federal government, you're the end user, which means you owe sales tax on a use tax on anything that you sell to the federal government. So you just have to then mark up your price. And so effectively you can charge a sales tax to the federal government and you just don't call it that. It's called a use tax. So you have to be very careful when you're selling to the federal government. There's another hand over here. I don't mean to not answer your question. I don't know the answer.
Yeah,
other than so where did they buy the boat from that has all the stuff in it?
So the boat is an owner's. They
Yeah.
come to us, we fix it. So for example, what we would the use tax on was like paint brushes, plastic covers.
Oh, because you're the consumer of it. Now, if you paid retail at source when you bought those paintbrushes, if you paid retail sales tax, you wouldn't have to pay use tax. But
you charge use tax to
so it's sales tax. That's a sales. But sales and use tax are just basically mirrors of each other. They do the same thing. Yeah.
Would use tax also be covered like rentals, like hotels, cars, something like that?
Yeah, no, those have separate taxes associated with them. So there is a sales tax, but then like in the city of Seattle, there's a lodging tax. So that falls under the kind of other tax category. But that's not a use tax. But basically, use tax is just a tax that's due for anything where sales tax should have been charged but wasn't. That's what the use tax is. So they find one way to get you or the other, right? All right. Let's see. Okay, so we're through the first item. All right. Business and occupations tax. What is that? Does anybody know what that is? We talked about it, I think, already once in this class, didn't we? No? Well, what's the business and occupations tax? All right. It is a tax that is on for the benefit of doing business in the state of Washington. And it is charged on sales, not on income. So you could have a business, and I'll tell you, companies from out of state, when they come here and hear this, they can't believe it. Like, I'm not making any money on this business. Why do I owe tax? It doesn't matter how much money you make. It matters how much you charge, what your total revenue is. So it's a tax on the revenue that you generate in the state of Washington. And it varies, the rates vary. Let's see here, find a quick, supposed to be no tax rates. So it ranges anywhere from 1.5% on, so all services that are not retail sales, the seller of the services has to pay 1.5% to the state of Washington. That's like law firms have to do that. So on every dollar I charge to a client, I have to pay 1.5 cents to the state of Washington, whether I make any money on it or not. And it's lower in the categories where retail sales tax is due because they collect enough for retail sales tax. So, but remember this, in Washington, you pay tax on how much you sell, not how much you make. And so this comes up in some interesting examples. Staffing companies is the example I always use because I had this case where a staffing company staffs did I tell you the story already? Okay, so a staffing company sells sells, it's a bad way to say it, but contracts with Microsoft to staff a $100,000 software engineer. Okay, so Microsoft pays the staffing company $106,000 for this, or $116,000. I think it's like 16% markup on staffing companies, whatever. So the revenue to the staffing company is $116,000, but in most states they would pay tax on the $16,000 because the $100,000 is just passed through, not in the state of Washington. In the state of Washington, the service and other is due on the 116, not just on the 16 of markup. So it's 100% of the income. Even worse, if it turns out that that employee, that Microsoft employee, is a contractor, and they turn around in 1099 The contractor pays service B&O tax on the 100. So it actually gets taxed twice in that case. And this contractor has to pay both sides of Social Security and Medicare. Yeah. So if you get 1099 income in Washington, you're supposed to pay 1.5% of it to the state, no matter you're effectively running a business in the state of Washington. Okay, nasty problem if you get stuck with it, so make sure you get it figured out. Property and utility taxes, those are kind of self-explanatory. There are some selective sales taxes. This is the liquor and cannabis. So there's an extra sales tax on liquor and cannabis and other things. So here I'll show you what it looks like. This is the distribution. So in Washington, most of our tax collections come from the sales tax. This is why Washington was hit so hard in the recession, because when the economy tanked and transactions tanked, this piece of the pie shrunk, and it just had a much bigger impact on our budget, on our state budget, than it would have had we had an income tax. So you can see that the business and occupations tax is number 2 as far as its contribution, and then the very selected sales taxes are next, and are actually property and utility and selected sales taxes. So this is how Washington funds itself, but mostly through the retail sales tax, because we have no income tax here. All right, any questions on that? Okay, so this is heavily, in Washington, is heavily burdens businesses relative to individuals. Yeah.
So just regarding the business tax in Seattle.
Yeah.
Who actually passes the vote on taxes?
In bless you. The taxes in Seattle?
Yeah.
Or yeah. Well, there's 2 ways. One is by referendum. The other is if the city council passes a tax on separately. So this whole head tax, you heard the whole debate about the head tax. So this is where they're going to charge large companies a certain amount per employee to try to pay for homelessness. And so Amazon, have you been following the story? Amazon flipped the big finger at them, right? What did Amazon threaten to do? They're like, fine, then we're just going to stop building and we'll stop hiring people. Yeah. So Amazon now is powerful enough that I think, it'll be interesting to see, because what's happening there is there's a majority support for it on the city council, but the mayor has a veto right, and she has been hedging. So it's a question about whether she's gonna veto it or not. But it was interesting to watch that story, because you see the dynamics playing out, see how powerful Amazon has become in the city. Okay. I'm just going to talk briefly about regression, tax regression. I don't know if you've heard of this. This is a common criticism of our tax system, because the way that our system is structured, because we charge mostly sales tax, it says here, poor residents pay 16.8% of family income in state and local taxes, while the wealthiest 1% pay only 2.4%. So this is the definition of a regressive tax, when the lower income levels pay a higher percentage of their income in of the tax burden than higher levels. And that's just because of the structure of our tax, right? That's just because consumption, that wealthy people don't consume as much relative to their wealth as poorer people do. And that's why it's considered regressive. And let's see, what did it say? We're by far the most regressive tax system in the nation. All right. And they know this, and they talk about it every year, and they don't ever do anything about it. Okay, so what happens if you don't pay your taxes? What's the consequence to this? You get what? You get fined. Yeah, what else?
Audit, probably.
Audit. If you don't pay, you get audited, right? What? Yeah, you can go to jail, but it has to be pretty extreme before that happens. Yeah. Right. So both the federal and the state government have the right to lien property for non-payment of taxes. And they don't have to lien specific property. All they have to do is record it, and it is a lien on everything you own. And it's very hard to get those released once they're in place. It also is terrible for your credit. So if you end up having a tax lien, it just destroys your credit. So it's and once they're on their public record, and they almost never go away. I mean, in theory, they drop off after 7 years, but they almost never go away once they're a public record. So be very, very careful with this. The other thing that Washington State can do, if you don't pay your state taxes, is they can revoke your business license. So they can actually revoke your right to run your business. So if you're not careful with them, it could be the end of the business. And they don't care if your business goes out. I've been in so many meetings with them where the client says, look, I can't earn any money to pay you if you don't let me run my business. And the DOR says, well, if you're not going to pay, then we're not going to let you continue to run a business here if you're just going to continue to run up a tax bill. So, and they're ruthless about it. So, and you can't just close your business and start another one because your social security number is linked to the UBI, and they track that. So they've cut that off. That used to be in the old days, that's how you do it. You just shut it down and start a new one. They even track you to other states. I had a client who did that. He just couldn't break out of this, so he moved to Missouri, and they have an out-of-state tax collection division that has agreements with the other states, and they track them down in the other states and file liens in the other jurisdictions.
Can they garnish your wages?
They can garnish your wages, correct. Yes. They can garnish your wages. They can garnish your bank accounts. I have had this happen too many times to count. I get this panicked phone call from a client in the morning. My bank account is empty. And they literally will go in there and just empty it. Uh-oh. That's not good. Upside down. Keep it from. Yeah, I need to stop using so many gestures.
Unplug it.
Oh wow, look at this, all this advice I'm getting. This has obviously happened to you before.
Put it in rice.
My wife did that to her iPhone and it ruined it. Oh, thank you. All right, so let's take a break.
I walked into my husband's office and his keyboard was upside down. It's like, what happened?
We're going to Portland.
Yeah, field trip to Portland. Thank you, sir. Thanks a lot. Thank you.
Well, look at you earning your brownie points.
I would do that for anyone.
Top got covered in coffee or water.
None of us are that good. Just genuinely good people inside.
Whoa. There's a misinterpretation right there. He's thinking I'm a good person.
I did not. No, I haven't seen it, but
Pretty good.
yeah, because they Freakonomics is interesting. I like that guy.
Yeah, well, they like brought in both sides. Not many things do.
Right, because it's always so political. It's always comes from the one side or the other side.
Yeah,
Right?
whereas they brought it in. It was pretty good.
You're talking about
That's
about the tax cuts and jobs
Yeah,
act, but it's brought in a different.
Yeah,
The Freakonomics.
podcast. Yeah, I just listened to it. It's pretty good.
Oh, is that what you mean?
Yeah.
Oh.
No, I like put yeah.
No, this is fine. All the. Don't worry about it.
Okay, and then I'll work on the